Hello, one day is Thursday, February 13th, 2025. This is week and charts. So what we talk about? Well, I guess before we do that, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. So we're going to talk about current market conditions. Obviously, I have a lot to say about that. The choppy nature, the mixed nature, the sitting on your hands, and things of that nature. Your questions on trading, your favorite stock and crypto picks, you can go ahead and type them in now if you like. That way, towards the end, we'll have some. Anyway, I want to update the methodology in action. I have a new mystery chart this week. Finally, we have a setup. TFN 10% update. I want to talk a little bit about a buy B we talked about in Facebook. And I also want to talk about the Landry 100. And I have an opening gap reversal that I mentioned last week I want to follow up on. And of course, if you have any questions, feel free to type them in. We're going to continue the 25 trading resolutions for 2025. This is part 4, 16 through 20, I believe. There's a disclaimer screen. As you know, you can lose money trading. Always often summing up all predictions are about the future. And a lot of stuff can happen between now and then. And I borrowed that from my buddy Greg Moore. So we'll talk about in a minute. There's all my contact information. If you want to screenshot it, feel free to get in touch with me. Also, my email is dave@davelandry.com. I answer all emails eventually. And obviously, if you're in the Facebook group, just ask away there. We will answer so everyone can benefit. All right, let's talk about the mystery charts and the methodology in action. Here's the mystery chart for this week. You can see the Landry light has been really nice for quite some time. That means the lows are greater than the moving average, and then pull back to the moving average. Landry light goes to 0 when that occurs, and that is what I call a Landry light pullback. Notice that it was in kind of a gradual trend, and then it began to accelerate higher. That's also what's known as accelerating momentum strategy. And if you were to kind of use your mind's eye and lift this bar up a little bit, this straight line, you'd see that this move higher was fairly persistent, meaning that for the most part, it tended to go up day after day after day. Mathematically, that's equivalent to linear regression. I just like to draw a line through the bars. And of course, we had the pullback to the moving average there, or the parameters based on a 100K account. You'd buy 1,290 shares, and there's your risk, your entry, your stop, and your initial profit target. So I'll follow up with this one, obviously, in upcoming weeks. Any questions on this before we move on? All right, let's go. Okay, I mentioned an OGRe last week, and the reason I mentioned it was when I start these shows, I tend to do a lot of confessions. And one of the confessions was I put this on, and I'm like, okay, I'm going to go over here and look at these shiny objects. My trade station is over here, and then all my other monitors are in front of me, where I do a lot of my research and all the other good stuff. Anyway, so I'm over here doing whatever, probably looking at a kitten video, whatever. And when I look back over to my trade station, I noticed that this stock had shot up 2.5 points from my entry and then came back in. And I was very concerned that this would turn into a losing trade. I haven't done it lately, but Mike P gave me a shame bell. It says shame on there, and then I used to bring that. Shame. I guess I'll start doing that again. Kind of a silly reminder. But anyway, fortunately, it worked out for me. So I just did 100 shares. This is kind of an S&G type of opening gap reversal. I didn't fully commit to it, obviously, but I felt like I wanted to do something. So entry was there, and I just didn't want to count. IPT was 2 points higher. And then on my trailing stop, once I hit the IPT, and then once I think I was about 3 points ahead on this, I went ahead and opened up that trailing stop to 3 points. And obviously 3 points wasn't enough because I would have made a lot more money if I could have somehow held through the day. Now, these opening gap reversals, you're looking for, let me just back up a second, you're looking for a really strong trend, and you're looking for the stock to get absolutely whacked. A big, thick stock, a well-known stock like Roblox, or however you say that, would be a good candidate for this type of trade, Tesla, or kind of, I wouldn't say just the opposite of the core methodology, but a very well-known higher capitalization stock tends to work a lot better. You've got a lot of jockeying for position, and also the market makers tend to say, oh, you want You want me to buy this stock from you? You want me to buy this turd from you? So what I'm going to do is I'm going to lower the price so damn low to where it's cheap. Okay, I'll buy it from you at this price, but I'm going to give you a really crappy price. And then what I'm going to do is I'm going to flip it out later at a higher price. And I might even, I don't know if they could actually manipulate the market a little bit. I hate to say that, but definitely they don't buy and sell to lose money. They're forced to buy and sell as a market maker, but they know what they're doing. And what you're doing in a case like this with these ogres, especially in a big thick stock that has a lot of institutional support, is you're getting on the side of the market maker. But anyway, the trailing stop stopped out for better than the poke of the eye. It came to about $176 overall. You do that once a day, that's a pretty good thing. But unfortunately, they don't come along every day. Anyway, I just thought I would show that it was more of a shame type of admission than it is like, hey, look at me, I made $170 on an ogre, because I did not place my orders for my IPT, my trailing stop, right after I placed the trade. I'm like, I'll get around to it. There's more interesting things going on over here. All right, I want to talk about the buy at B setup that we talked about in the group. And by the way, one thing I've really been noticing a lot of with IPOs, and I can maybe mention it again in the next show, but the buy at B rules, and this is a pattern to get you in as early as possible in a brand new IPO, as early as the close of day 5. And in some cases, you can front run that close a little bit, and I'll discuss that in 1 second. But one thing that's been amazing me lately is IPOs kind of heating up a little bit. And one thing that's amazing me as I'm going through my IPOs is that there's a lot of them that come public and they top out on the first day. Well, the buy at B rules say you can't buy unless it takes out that first day high, if that's the high for the week. And then other than that, you need a new closing high, which I'll show you in just 1 second. The point I'm trying to make there, believe it or not, as I have one, is I am shocked at how many IPOs come public and they make their high on day 1. And that's an interesting phenomenon. And it's probably a lot more than you would think because of the survival database. Because if you have a survivor database, it needs that you're only looking at those stocks that survived. It didn't go to zero, it didn't get delisted or whatever. But anyway, so day 1 rule, if the high is set on day 1, it has to close above the day 1 high. And that silly little rule, if you don't walk away with anything today, for IPOs at least, that's what I was thinking earlier, just remember that. But anyway, buy at B, we were talking about this. John's our resident IPO expert, and one day we'll have to do something together with IPOs, but he does a fantastic job and with keeping up with IPOs, and he often mentions a lot of them. And it's hard to say in hindsight, but in some of these cases, I wonder whether or not I would have missed him had John not been paying attention. I'm pulled in about 1,000 different directions daily, and I'm just thinking out loud. Maybe that's one advantage you guys might have, is you're not trying to do 50 different things when it comes to the markets and trading and all this other stuff. You can maybe focus a little bit more, and then obviously the educational business is a lot of what's the word there, fires and things that chase down. But anyway, we're talking about this one, and we talked about how it's potentially going to trigger soon. So there's day 1. Remember, we don't do anything till the close of day 5, and I'll talk a little bit about front running in 1 second. Day 2, day 3, day 4. Now on day 4, that's the highest close, or the new closing high, however you want to look at that, since this IPO came public. So that's going to be our buy line, and we're looking to buy market on close if the market closes above that high. So on day 5 or beyond, okay, so let's say day 5, the market sold off fairly hard. This thing could trigger day 6, day 7, and John's pointed out some longer term ones that have triggered. If you go in and watch the IPO course that I did, which I think you get free as a gold member eventually. The longer you stay a member, you eventually unlock all the courses. But one of the things I talked about was that the buy at B, even though it's intended to be this pioneer pattern to get you in on day 5 or somewhere around the first week or 2 of trading, it actually has some longer term characteristics. So I would encourage you, like in a case like this, it doesn't cost you anything. Set an alarm at that new closing high, okay, and to go about your life. When I did the traders retreat down in St. Lucia a few years back at for Charlie Kirk, he was kind enough to invite me as a guest of honor. One thing that I got down here, I'm like, where are all the other guests of honor? Guests. He goes, you're the only one. I'm like, oh wow, thank you, Charlie. But anyway, one thing that was kind of interesting, and that's the one thing I was thinking about a little while ago, is like, it's great getting people together, and that's why I'm excited about the Facebook group, because we're all kind of there digitally, but eventually I like to get together in person. I do have one client that has offered up possibly his place to do that at some point in time. So if that's something that would interest you, let me know. I wouldn't look to make any money off of it, but I would like to cover some expenses and whatever expenses that he has in providing that. And it does add up a little bit. But anyway, long story endless, when you're in person like that, you get a lot more out of it. You can't discount the importance of face-to-face. And one of the things that came out of it, believe it or not, I have a point to the story, is that Charlie Kirk would set these alarms and forget about them, and he might have 100 or 200 alarms, and they might trigger way down the line. So I think that would be a really good thing to do with this buy at B pattern, is set your alarms and don't have them expire. So maybe a year from now, this thing makes a new closing high, and it might have bottomed out and then really nice little base, whatever, and it might be worth a shot. Sometimes these IPOs, or a lot of times these IPOs, get ahead of themselves, and they kind of implode, kind of like the day one rule I talked about a second ago, and that's the new high for a while at least. And then they go down and bottom out, and then maybe a bow tie or a first thrust or some other type of pattern that I trade would be a good pattern then, or of course the longer term buy at B. Anyway, so I did get in a little early, which actually hurt my performance on this one. One thing I've been talking about a little bit in Facebook is an expansion of range on day 5. So if you come in and you see the stock on day 5 and it looks like it's going to really trade well above that new closing high, okay, or trade at a new closing high, in this case above the day 4 high, if it looks like the range is expanding, then you can go in and get in a little early. Now, always a little dangerous to get a little early with a pattern, so that you kind of like getting to that pioneer mode on a pioneer setup. Pioneer meaning early trend setup. But anyway, you're getting in before the entry, so there's always a danger in that, and that's what I did. Anyway, you could see 29,875, and technically around 2950 would have been your entry on a close. And I'm looking at a 2-point IPT on that one, which hasn't been hit just yet. So buy a D, probably the simplest thing I do. There are a few caveats. The range has to be there. $30 rule. This was right on the cusp of that $30 rule. It used to be a $20 rule, but now it seems like 30 works better, so I've adopted that. And ideally, you want some sort of excitement with the company. What's the story, fad or glory? If it's a brick and mortar retailer, I'll wait for a secondary setup like we did with Academy a few years back, ASO. Anyway, that's the buy at B. Any questions on that? Please let me know. Let me check in with YouTube brethren. Just a really brief update. I know I say this every week, but I'm going to keep it really brief this week. So these zones are based on the percent away from the 50-week closing high. So if it's at 0%, the market is making a 50-week closing high like it did here, and then here, and then here, and here, here, and then a few weeks ago. And here's what's kind of interesting, by the way, is we're just off of this 50-week closing high, which is also all-time highs. So we're within 5% of that 50-week closing high. Now, when you get greater than 5% away, as Jeff pointed out to me, he likes to think about exiting a market. And I feel like 10% for indices at least is a good round number. Now, by the way, because I use this moving average as a whipsaw filter, it has to close below the moving average, okay? There's your sell signal right there. To my surprise, it actually worked in Bitcoin. Now, 10% is not enough in Bitcoin, but with the whipsaw filter in there, it did actually work. I'm not sure you want to rush out and trade it at Bitcoin, but it is kind of interesting. And by the way, the whole idea or designer's intent, however you want to look at that, is to avoid the so-called diaper change moments, as Ian McActivey calls them. And knock on wood, and I know a lot of it's in hindsight because it went back 100 years, right? Or 120 years, whatever it was. But this would have kept you out of every bear market in history. You would get hit a little bit going into the bear market, but fortunately, even like in 1987, you would have got an exit signal on a Friday, okay? Now, whether or not you were paying attention to that, who knows? I guess when the market began to tank on Friday, you probably would have woken up to the fact that you could get a sell signal. And in a case like that, if you're following the system, you follow the system. You don't want to wait and see. Anyway, sell signal, last sell signal was there because it dropped 10% from that 50-week closing high and closed below the 50-week moving average. Buys a little more stringent. You need 2 bars of Landry light, and you're buying on the close, and that would be a calendar close. That's how I tested it. So that's what we'll keep it with. And I think it's been out about 5 years or so at least. So your sell is a close below the 50-week moving average and 10% or more away from the 50-week closing high. So when I grabbed this capture yesterday, that would have been 54.91. And I guess until we make a new closing high, that's going to stay there. So we have to take out 61.01 for this to ratchet a little higher. Anyway, as I've said ad nauseum, and again, I'll go through this quickly. This is the TFM 10% system and the Qs. The sell would be right around 479, a little bit below. You can see the moving average is now above the 10% zone. So the 10% zone would be where you would sell the market. Anyway, to my surprise, I bought it back here and just 100 shares for S&Gs, but this thing has had a pretty darn good run, about a 65% run over that period of time. And as I've said ad nauseum, when I put it on, I'm thinking like, who cares, 100 shares, this will just be S&G type of trading. And then to my surprise, it really took off, and now it's actually becoming real money. Now there's $50,000 of margin in this one position. But anyway, that's it for the TFM 10% system. I do want to keep, I was thinking earlier today, do I want to keep updating this? Yeah, I need to figure out a way to just do it more quickly and say, go watch the old video if you're interested. But I think the importance of is just showing you every week, we're following the system, we're following the system, we're following the system. Not that you want to rush out and trade mechanical systems, but trading a single little mechanical system like this can teach you trend following and how the drawdowns suck and all these other things that come with longer term trend following. As I say ad nauseum, the way we've sort of solved for that, making my little air quotes, is that we use a hybrid approach to the money and position management. We take the swing trade profit off and we let the rest ride. Even on the OGRe trades, we're doing that too, okay? Taking, let's say, a 2-point profit, and then we're trailing that stop up 2 points. And then, like I said earlier, in that particular case, we let it open up intraday, trying to catch even more. Proof of concept for the Landry 100. This is an experiment I restarted, and it's been a lot of fun. I know you want to party with me. And by proof of concept, I just want to take a minute or two and explain what my thought was here and how this is conceptually correct. And momentum often begets momentum. So you have a market that starts making new highs, it starts making more and more new highs, and the FOMO kicks in, the late adopters, etc. Like right now, Bitcoin's stuck in the sideways range. We'll talk about it in just a few minutes. So I think maybe the early adopters are cashing out at $100,000 and they're making millions and millions and millions of dollars, and that supply is feeding the demand. Now, once it gets above 100K and stays there, because so many people poo-poo Bitcoin, as I've said before, somebody who you think would know better would send out his newsletter at 4,000, at 5,000, at 6,000, at 7,000, at 20,000, and so on and so forth, what bullshit Bitcoin was. And maybe it is bullshit, but as a trader, you shouldn't care. One thing about momentum is it ends badly. We talked about comes with the territory thing, like Mike Moody said, if you're gonna have a baby, babies are pretty cool. You're gonna have a lot of baby poop. Got a puppy, puppy's pretty cool, but last night after puppy wakes up in the middle of the night, he ends up in the bed. And at 3:30 this morning, he was biting my head. So if you're gonna have a puppy, they're awesome, but you're gonna get bit in the head. The real money is in longer term trends, and this shows it. And I'll show you one that's up 400% since we put it into the portfolio. This is a hypothetical portfolio that I'm running, and I'm actually putting them in at the end of the day. I'll go through my list and do my analysis. Obviously, with real money, you want to do it in real time. I have experimented with it a little tiny bit, and so far that's failed miserably. If that does begin to work out, I'll let you know. But I think one thing learned from that, or relearned, is that you do want to obviously keep your winners and sell your losers on that. One thing kind of cool is it does kind of put you in the hunt for the next big thing. You might not always get, and quite often you won't get a core methodology set up with some of these momentum stocks. Often you do, but not sometimes you won't, obviously. But with this list, at least they're on your radar and you're seeing the next big thing, and then you can figure out, okay, I need to figure out a way to get into this great trend. It does kind of prove out that breakout trading has low accuracy rate, at least initially. A lot of the ones I put on this list, when the day I put them on, it's like the next few days they just kind of implode a little bit or consolidate, and then they eventually either, of course, keep doing that or they take off. But the ones that really take off sometimes will actually trade sideways for a while before taking off again. So that's kind of an interesting thing. The outliers make it all worthwhile, which we'll take a look at in 1 second. Now, you do need quite a few stocks to ensure that you catch the outliers. I think if you just went out and traded breakouts on a few stocks here and there, I think you probably wouldn't be very successful unless we got into a rip-roaring bull market. It's kind of interesting. I don't want to go digress too far, but you have to be careful to understand the market you're in. And like right now, I'm seeing a lot of reversion to the mean gurus on YouTube, and I use that term loosely, telling you how much money you can make. Well, the market right now is doing this, as you'll see in 1 second. And yeah, that's a good market for selling options and all that crazy reversion to the mean trading. Unfortunately, when we do begin to trend again, you're going to get creamed, absolutely creamed. Anyway, so here's the list, and as I say each week, all were bought at new highs. I did a screen capture a minute ago, and this one's up 418%. So the buy was there, and that one actually would continue to go straight up after I bought it, so to speak. And you can see it's had a pretty good run, 418%. And there's some big numbers in here, 220, 200, 150, 110, 110, 110, 194, 80, and so on and so forth. A couple of weeks back, I showed the bottom of the list. The bottom of the list is not going to look too ugly. And then there's one in the list today that's getting creamed, but it'll come out tonight. And that's because we're constantly doing this window dressing. We're putting better stocks in, and we're kicking poorer stocks out or ugly stocks out. It's the employer versus the parent model. Okay, the parent, as I say quite often, anything short of mass murder, they're going to stick with the child and try to make sure the child does okay and forgive the child. Whereas a good employer is gonna kick out the dead weight and bring in better talent, or the good fantasy football player is going to get rid of the crappy players and add in better players, or however that game works. I don't know, but I think that would actually work. Nick says, I love TFM and longer term systems, even with indices, but it takes so long between the buys. Yeah, that is an aspect of it, but it's okay. I purposely designed the system with minimal whipsaw filters, but with whipsaw filters nonetheless to keep you from having too many trades. Okay, and that's the whole designer's intent, is just to keep you in the market for as long as possible and get you out when the market could be in trouble. So yeah, we have a lot more, Nick, there's a lot more shorter term stuff that we look at too. But to my surprise, as I've said ad nauseum, and if you get really bored at night, you can't sleep, stealing a line from Greg Morris, just don't operate heavy machinery afterwards. Go in and watch some of those old shows where we talked about a lot of these things, and go in and look at like the pandemic sell signals, because we had like bow tie sell signals. I think we had a TFM 10% system trigger before the bow tie signal actually triggered, which I thought was kind of fascinating. A daily bow tie, that is. So yeah, good points. All right, any questions on all that? Lately, I've been doing a series, 25 trading resolutions for 2025 and beyond. Number 16, I will hold myself accountable. And that is a big one. You get into this business thinking that, man, this is gonna be great. I don't have to answer to anyone. Well, it's like, that's the good and the bad all rolled into one. As Robert Rotella from Rotella Capital Management said, you do not have to explain reasons to a high official to escape censure. You have a far harder task. You must instead justify your actions to yourself. There's no way to hide when trading, because you always stand alone. Doug Hirschhorn says, asking to be held accountable isn't a sign of weakness. It's an indication that you know yourself. So as I've said before, I don't know if it was in Dave Landry Swing Trading way back in, geez, when did I write that? 2000 maybe? Seems like every time I write a book, there's the bear market. I've been working on one for years. It'll probably never get published, but a lot of the stuff you see in these presentations comes from that. Anyway, there's no one to answer to or justify your actions to, so it is the ultimate freedom. Now, the thing is, because you're not holding yourself accountable, a lot of times it's like, you know what you're doing wrong? You know what you're doing wrong. As I said 1,000 times, I'll try to keep it short. A client several years back, it's probably been 10 years now, he was on my trading service, and we had kind of a choppy period, kind of like we went through now lately, like the last 6 months or so. And we didn't set the world on fire, but we kept our heads above the water and made a few bucks, okay? Not enough to brag about. But anyway, he said, I can't make any money with service. And he demanded I looked at all his trades. And it's like, this is kind of not what I want to get into, but he was insistent. So I did it. And I said, okay, I've got good news. Like you did fairly well. In fact, you did perfect following the service. You did everything you were supposed to do in the service. Stops, profit targets, taking the trades. It's like, it's just a beautiful groundwork for this is what you do, and this is what you did, you know, good, bad, and indifferent. And I said, the reason you lost money was you had 21 day trades, and I think it was Continental Air, which no longer exists. And he said, I was kind of shocked because I know. So it's like he knew. And then in another conversation, because he does really well, and he's a really good trader, he's actually a good scalper, which is amazing. But in another one of our interludes or whatever, he said, I was asking him, it's like, look, what if you did this? What if you told your wife, you're following this Dave Landry guy, he's got this trading service, and he's wrong a lot, but over time, he tends to do okay, and I'm going to follow everything he says and be prepared for some losses, but I'm going to show you what he says, and then I'll show you what I did, and then obviously, if you did all these other ancillary trades too. And he says, oh no, that would end the marriage. So it's like he knew, or he knows, that he's doing the wrong thing. So you know what you're doing wrong, you know what you're doing wrong. All right, number 17, I will embrace my emotions. You cannot control your emotions. You cannot eliminate your emotions, as I preach ad nauseum. Each decision has emotions and stress attached. If you didn't have the part of your brain that was emotional, that allowed you to make decisions, because every decision has emotions. I know I repeat it ad nauseum, but it's like my decision this morning is like, okay, what am I going to eat before coming in here? You know, it's like, oh, we got some leftover tacos. All right, I have a taco, but I'm not going to put a bunch of beans on it because I don't want to be burping and tooting in the middle of my presentation, right? So every decision in your life has an emotion and stress involved with it. Now, when it comes to emotions, the RAIN model comes to mind. you want to obviously recognize what's happening and then allow the experience to be there just as it is. So embrace what's happening, not eliminate, just say, okay, I'm having this emotional reaction because I'm human and it's perfectly normal. Years ago, many years ago, before I learned about this neurology involved, and I learned it from Denise Scholl speaking in San Francisco probably 15 years ago. So, and I learned it from her, and she's referencing, what's his name, Descartes, how do you say his name? And who else? There's some other people that have done this type of research. But you just have to, before I knew all these things, I would often say, what's wrong with me? You know, why am I so emotional? Well, because I am human and I am alive. So you want to allow the experience to be there. You want to investigate with interest and care. And I know this is kind of touchy-feely, but in an investigation phase, it's like, did you do the right thing? Are you doing the right thing? Now, this might be a bad example. Let's see, is it down today? Yeah, it's down a little today. Oh, it's actually up a little, but not much. Last week, I talked about putting yourself into unnecessary emotions and putting yourself into an unnecessary state of regret. If you have a 5-point stop, STOP, and a stock, and the stock is bouncing around a point or two, don't live and die by the sword on each little point or two up and down. So just say, okay, well, my stop's in place. It's above my stop. I know, easier said than done. I need to not be too emotional about this. I need to not let the emotions control me. I need to embrace them, okay? And then kind of nurture it with self-comparison. Don't say comparison. My Kunash just slipped out. I saw an RCA sticker today. I haven't seen those in a while. Registered Kunash. Anyway, you want to nurture with self-compassion. Again, don't beat yourself up. Don't ask questions that are going to give you negative answers. Like, don't say, what's wrong with me, okay? Enough other people tell you that. So embrace your emotions. And then you have to ask the hard questions, okay? Before going into a trade, ask yourself, you know, number one, is this an FIA trade? And part of that is like, do you really want to put capital into harm's way? Every trade, no matter how fantastic it looks, obviously can result in a loss. And eventually, by the way, it will end badly if you are a trend follower type of trade. Maybe if you're trading some sort of butterfly and it's got to close at the exact point, and then you'll make a little or whatever, you know, yeah, or 9 condor or something like that. Yeah, knock yourself out. And maybe there is an optimal point for that, okay? But if you're trend following, the last correction that turns out to be a top you'll give up a lot of money. Now, on a lot of trades, there's been a lot of trades I showed one last week where we stopped out, okay, and had our stop just been a tiny bit further, another quarter point, sometimes another cent or two away, we would have caught another 100% run in that trade, at least from where it was. So you never know if that correction is going to be the last, and then shit happens. You know, sometimes you get stopped out. So you have to fully accept the risk. I think Douglas, I don't know if I had it in the last presentation, but I think he said that there's any animosity, if that's the word, after you enter a trade, then you have not fully accepted the risk. In other words, things that's easier said than done. And I know this, believe me, and I live this life, and I'm a very emotional kind of guy. I'm super emotional, and I took a personality test, and my agreeableness, as I've said ad nauseum, is pretty much non-existent. And I know that's a flaw in me. So, you know, embrace your flaws, and that could be, and then figure out how to make them a superpower, you know? That could actually be one. Extraneous influences, I talk about this ad nauseum. And it's like, what are you dealing with? Okay, what's financial burdens are you under? What jerks are you dealing with in your life? What's going on with your family? Are you taking, you know, it's kind of like we're in the season. It's like I lost my parents a few years ago, and now my wife is going through that season of the getting up in age and a lot of the accoutrements that comes with that. So what extraneous influence are you dealing with? And you're dealing with a lot of them, believe me. Number 18, I will keep a journal of my trading actions and my feelings. So in addition to your trading journal or in your trading journal, why did you take the trade, but also talk a little bit about what's happening in your life, and that's going to help. And the morning pages, and it's actually, I saw somewhere where it's a form, maybe it was from the guy who wrote the book called The Tools, but he actually, it was in a Netflix presentation. I forget what it was. What's his name? Jonah Hill was part of that. It's really good. If you could find it, I'll get the name and put it in post. It might have been called The Tools. But in that, they mentioned that morning pages or writing, they didn't call them morning pages, but writing is a form of meditation. I was glad to hear that. I would love to be able to meditate. I have not. I tried a little here and there. It's something that I don't do with intent. I think if I did it with intent, I think it's a wonderful thing to do. I would encourage you to do it. If you do it or start doing it or already do it, let me know. Let me know how it's worked for you and if you have any tips or tricks to do it. But the writing for me is that. And now, of course, extraneous influence. I got a puppy biting my feet while I'm trying to write in the mornings, but that's another story altogether. But your morning pages is going to be a godsend. As I've said 1,000 times, wake up and write 3 handwritten pages, and I swear it'll change your life. Nobody, I haven't met anyone yet, seems like that actually does them after me telling them to do them. So do those pages. The thing about trading is don't expect trading to fill a hole missing in your life. And you've got to be really, really, really careful about that. And that's where the identifying these extraneous influences can really help. Number 19, I will believe in what I see and not in what I believe. The market can only exist in 3 states, okay? Is it going up? That would mean there's demand. Is it going down? That would mean supply. And is it going sideways? That means the market is at a bit of an equilibrium. Demand is meeting supply. When we get to Bitcoin in a few minutes, what's happening? It's at a sideways range, okay? People are buying it, but people are also selling it. Same thing with the S&P 500, the NASDAQ, and quite a few other sectors and markets right now. So you always want to truly ask yourself which one it is. I recently started saying this again, I guess because I saw Linda a while back in San Francisco. But I said this so many times, people started giving me credit for it. It's Linda that said, if you don't know which direction a market is headed, ask a 6-year-old kid. And that dovetails nicely in with my big blue arrows. And I've been told before, especially doing bull markets, where to stuff those arrows. And that's how I got the name Trend Following Moron, because this particular trader was very short the market, and I kept drawing my up arrows. He loved me as long as the market was going up, and he was long, but he thought the market had gone up enough, as most people do when it's blowing off like it did in 1999. He was right, but early, and I think he really lost a lot of money in the process. So that's why he told me in an anonymous email, he called me a trend following moron, and he said some other nasty things too. Now, rarely is the market doing what you want it to do, right? But what is, unless you're, of course, Bill Clinton. Anybody remember that? It depends on what is. How do you define is? It's like, that's kind of like the Chewbacca defense. It's like, your head explodes. All right, number 20, I will read my 3x5 trading card before each and every trade. I've forgotten I wrote this card, and I have not been looking at this card. But I would recommend you have this little card, something like this, okay? And I'm just rereading this for the first time in a few years. I, Dave Landry, will take the best OGRe and trend trades, even if this means passing on okay opportunities and watching them occasionally take off without me. Kind of interesting. This is what I should be doing because I do get sucked into a day trade every now and then. I don't consider an OGRe as a day trade, but I kind of consider it as something that's it kind of dovetails in with the core methodology, like you just saw in a minute, because you've got the pullback and you've got the strong trend, and you have all these things. You got this huge, bigger picture pattern working behind you, as opposed to trying to catch every zig and zag. And I'm in front of all these screens. I don't know how many there are. There's a lot. probably more than I need. But anyway, this, and I'm going to come back to this in 1 second, but I was just thinking out loud, this one little thing might slow you down if you picked up that, if you had to pick up that card and read it before you placed any trade, any and every trade. Now, you have the cerebellum, I think, I should have studied my notes on this before I went live, versus the amygdala. Now, the cerebellum is what makes you, you. It looks like a brain. I should have grabbed my brain. I forgot that. I forget that I'm on video here. So this is a brain I bought a while back. And inside the cerebellum, like it's kind of like that. I forget how it is. I think this is what they do. This is a cerebellum, and this is I'm sorry, this is amygdala and the lizard brain, all the accoutrements of that. And there's a cerebellum, and that little tiny part of your brain often keeps you alive, okay? Whereas the bigger part is what gives you a conscience and makes you you. Now, the little part is really fast acting, and it has to be, because if you're getting ready to step off a curb in front of a cab, remember the yellow ones don't stop, as Elf explained, you're not gonna think, oh, is this guy not like me, and why is he driving so fast, and what's blah blah blah. You know, by that time you're dead. So it's very fast acting to keep you out of trouble. Unfortunately, it doesn't think much. It doesn't have time to think, okay? So it can make you do stupid shit. It involves a lot of emotions in your brain. And I couldn't understand how that part of your brain could be so emotional. And then I got to thinking about it, and maybe I read a little more neurology or whatever, but it fires off other parts of your brain that make you even more emotional. The more emotional parts of that, what is that, 8 pounds or whatever, sloshing around up there. So that part of your brain keeps you from doing stupid shit. And that emotional part, that amygdala, that so-called lizard brain, okay, because it looks like a lizard brain, looks like an alligator brain, which we should have some alligators in the neighborhood soon. Whenever somebody visits, we hop in the bikes and go right around the neighborhood looking for alligators, especially people from like California have never seen an alligator. Anyway, so you want to let the amygdala keep you alive, okay, but don't let it control your life. That's the little brain, right? No pun intended. So here's the question. How long does it take to go from here to here, okay? Well, believe it or not, only 2 to 3 seconds. So a little pause, and what did I do with that? Oh, here it is. A little pause might be all you need. So one thing I'd recommend you do is, and read your card might be the only thing you do, but you might want to wind the clock. So this is a little, I bought this years ago as a prop, or just to kind of have on my desk. It's all dusty and all, but it's I guess it came out of a Cessna. It's an old analog airplane clock. I don't know if it works or not. Anyway, the reason I bought this is because I'm a nerd, but Greg Morris was talking about when he was in the fighter simulators, and they try to trip you up. They try to fail you out of flight school, okay? Because they don't want somebody that's going to be real emotional, and they want to weed you out as quickly as possible. So they put you in a simulator and they F-what you really bad, right? And it's easy to get excited and crash the simulator or whatever. Better to crash the simulator than crash a jet plane, right? Well, a few years back, let me try to make the story as short as possible. I was having dinner with Greg in New York. I think it was doing one of the Traders Expos, and he was just visited because he wanted to have dinner with me and Larry and a few other people. Might have been his birthday or something, and he wanted to get together with the gang. And he goes, "What are you going to talk about tomorrow, Dave?" And I said, "Well, I'm going to talk about how sometimes it just takes a few seconds to go from the lizard brain to the big brain, and you just take a few seconds before trading. You might not do something stupid and emotional." And he said, "Wind the clock." And then he explained to me that in the simulators, when the shit would hit the fan, as they were forcing him to do, he would let everything happen, okay, kind of like that rain thing, right? And he would reach in and wind the clock on the dashboard. I guess he was flying F4s back then, and they had an analog clock. clock. And he said that years later in the airlines, when the shit would hit the fan, he'd touch the console or whatever they call it, and take a breath and then react. Okay, you got to slow down that automated, emotional, crazy part of your brain to get to the rest of what's sloshing around up there. And he did. He went on to tell me a story that, and then he sent a longer version of the story, which I read recently, where he's coming into Dulles, I think, in Washington, and they're in a holding pattern because of the weather's really bad. So they're flying around. The co-pilot had the plane, and the co-pilot says, "We lost an engine." And he says, "Do you want me to shut it down?" And Greg goes, "No, my plane," which means I'm in control now. So Greg took the yoke or whatever, took the wheel, whatever you call it. I don't know what they call it, stick. I guess the steering wheel, whatever, in a airliner. And they didn't shut the engine down. They shut down the generator, which was connected to the engine. And the reason you didn't shut the engine down is you got two engines on the plane. If you shut the wrong engine down, especially low like they were, the plane's going to drop like a rock, and you might not get that engine started again. So he went on to tell the co-pilot, like, "No, do not touch that engine. Leave it alone. We're going to leave it on, okay? And if we get a flame out or something, we're going to deal with it then. We'll shut it down then. But no, do not shut that engine down." Took over the plane, and he landed safely, and no one was the wiser. The next day, he got grilled, okay? "Why did you do this? And why didn't you go to this airport? Because this airport would be an emergency thing or whatever." He goes, "I had it under control." He even told, because he had it under control, he even called the tower and said, "Please get all those fire trucks off of the runway. I don't want to freak out the people on the plane." So he landed safely. Anyway, long story endless, next day he's getting grilled, and he's filling out paperwork, and they're asking him all these questions, and just peppered with questions. And he says, "Look, I want you to call the head of the FAA and ask him these same questions." And what's ironic or crazy about the situation was there's only 3 people that knew about this up until now, obviously, and that was him, his co-pilot, and the guy in the jump seat. The guy in the jump seat was the head of the FAA. And after he landed, the only thing the guy said was he slapped him on the back and said, "Nice job, Captain," and walked out. And so he said that after he told him to call the head of the FAA, he never heard back. So anyway, wind the clock, okay? So that's what he did in that situation. Long story endless again, is that he said, "Okay, we could get into a lot of trouble here if we shut down that engine. Let's just think through this and not make that emotional response." Okay, Nick says, "Do you think individual stock picking can outperform longer term trend following like TFM on indices?" Absolutely, absolutely. So Nick is saying, like, can you just pick individual stocks and have them do better overall? Yeah, that's our whole goal. Otherwise, why bother? That's why I have the trading service. And the idea is to catch the occasional outlier that goes up several 100%, or maybe it doesn't happen often, but maybe catch something like that one in the Landry 100 that went up 400%. So yeah, that's the ultimate goal, is to capture some inefficient moves. And that's why we trade these inefficient stocks that are a little wild and crazy, but we adjust for the volatility, okay? All right, let's shift gears and go to crypto. Good points, Nick. Thanks for that. Let me do this and just let me know if there's anything when we look at. So we take a look at crypto, and this is what I've been saying ad nauseum. Bitcoin is just stuck in the sideways range, okay? So until and unless this gets out of the range, I don't think there's anything to do, okay? So let everybody else fight it out. And I keep forgetting to go dig it all out, but Livermore, let me just paraphrase him. He basically said when the market's just chopping around, grinding like this, those traders that are fighting it out are building the base for your next venture. So what will happen is, and I know I shouldn't use the word hope, okay? But hopefully this breaks out to the upside, okay? And then we catch a nice long trend higher. And I used to say the bigger the base, the bigger the launch into space, thinking I was really smart by coming up with that saying, until somebody said, that's Ralph Alcampora. I met Ralph once. He's a super guy. I met him a couple years back at ChartCon at Stock Charts. I guess I'm name dropping today. I know these people. Like, I name dropped early on. I was like in a presentation. I was like, oh man, I hate to name drop. They're like, well, if you know these people, you know them. And but he's a good guy, Ralph Alcampora. He has the barn with the Dow painted on the side. Google it's pretty cool. Dave Keller's been out there and checked it out. So it's really a cool experience. But yeah, the bigger the base, the bigger the launch into space, as my brother from another mother says. So I don't think there's anything to do for the moment in crypto or Bitcoin. Ethereum has been abysmal. You can see, look at the Landry line below that 30 EMA. Do not buy any market as a Joel statement as long as it's below the 30 EMA. Now, as I often say, sometimes you can sort these by percent change, and you can just buy the strongest ones when they're all really moving. And I'll just go through these real quick every now and then. Like that looks okay. That might be something I want to explore further later on. And the great thing, as I say quite often, is the bull bear cycle in crypto is fairly compressed. Like every several weeks there's a bull bear cycle, seems like. So what was that one that's kind of waking up a little bit? I don't want to make a trade just to trade, but that looks okay. Ideally, like back here, you can see I must have bought it back here at one point in time. You want to buy something that's banging out some new highs with a little bit of vigor. Now, this is not how I normally trade. I normally trade, like I showed you the mystery chart, the pullbacks. Buy at B is the closest thing to a breakout trade that I'll take. But when the crypto is really running, you can trade these breakouts or new closing highs or new highs, whatever, not new closing highs. All right, let's shift gears to stocks. Nick says, great stuff, DL. That's what I said too, just settling debate with friend. Yeah, what you have to realize is, now you're talking about a system. Individual stock could outperform longer term trend following a TFM. Yeah, okay, so he's talking about a system. So if you weren't using a system on something like the indices, I would say it definitely would not pay off, because you're going to have the occasional 50% or more drawdown. Everyone forgets, as I say quite often, kind of beating a dead horse today, but everyone forgets the NASDAQ lost, sounds like grandma. What movie was that? Sweetest Thing? NASDAQ lost like 75% of its value. And let's see if we can see this in 2000. Okay, look at that right here. That's like a 75% drop. So that's just absolutely, yeah, 74, 75% drop. So buy and hold works until it don't, you know. And the other thing I've been saying a lot lately is buy and hold. When you get a market that goes up, this just looks like it's going straight up, right? But it went up and then went down and then went up and then went down and up and down and up and down. It's kind of all over the place. So that's a buy and hold dream, right? Because at the end of the day, you're so much higher than you were and you look like a genius, right? But as a trader, you can't, at least in an individual stock basis, hold through all those zigs and zags. And you can't hold the market longer term like that either. You're much better off getting out. And I often show the spreadsheet for the TFM 10% system, again, going back to the 20s, I think, maybe a little earlier. And the reason it beats buy and hold is because occasionally the market loses half of its value and you get out of the way for those diaper change type of moments, okay? In the spreadsheet, I have diaper changes listed. And if you guys want, I'll be happy to show you that spreadsheet next week. All right, S&P 500. Looks like we're having an okay day today, up about 0.5%. Here's the deal. We're not too far away from a new closing high, okay? We're right about 0.5% away. As I've been saying quite a bit lately, when you're not too far away from new closing highs, all-time highs in this case, An up day is going to look really good, and a down day is going to look really bad. So a down day would put us back below the 50. That'd be pretty ugly. The thing to realize, though, is again, up, down, 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 up. So this is not a trend follower's dream by any stretch of the imagination. So just yesterday, we were flat going all the way back to November of last year. So that's obviously kind of ugly. You know me, I like to see it break out and not look back for a while. All right, let's take a look at the NASDAQ composite. Same sort of action as the Ps, looking a little bit uglier since it's been a little further away from its all-time highs, and it's been a little choppier and even more sideways, if you can imagine that. But today is an okay day. Again, when you're near new highs, a decent day is going to look really good, and a down day is going to look really ugly. I lost my screen over here. Okay. Rusty, same as it ever was. Rusty looks ugly. You can see Landry light below that 50 simple. Bow tie moving averages are rolling right back over. We could be in downtrend proper order once again fairly soon. That looks like a top for now. A few big up days, of course, to make all the difference in the world, but that would have to happen. Gold, the commodity, banging out some new highs in here, so that's looking pretty darn good. On the upside, gold stocks, for the most part, have been following suit as of late, so we could see some setups there fairly soon. Cybersecurity, all-time highs as of today. Internet faces the FDN, just of all-time highs. Here's the thing, though. A lot of these areas have just gotten to or barely beyond their prior peaks. So I like to see a prior peak taken out with a lot of vigor, okay? Because that way you don't have a double top or a potential double top in the works. But quite a few areas like financials, you can see kind of have that stalling at or near their prior peak. So that's a little bit of concern. You know the routine, though. Take things one day at a time. Broker dealer is just off of all-time highs, but again, notice that we're just kind of barely past that prior peak in here, so that's of some concern. Biotechnology was bottoming out kind of nicely in here, and then it began to sell off again. So this is an area you want to continue to avoid. Major drugs look a little bit better as far as bottoming out. At least they're above the 50. At least the bow ties have turned back up. As I often preach, I like bow ties when the market's at really low levels for buying and at really high levels for selling. So up here, this would have been a good short because you're coming off of all-time highs. You got your bow tie, and then you got your little pullback here. And you can see the market imploded nicely from that. So I'm less excited about a buy right here because we're not, again, coming off of major lows. But it is bottoming nonetheless, and that's major drugs. Semiconductors has been a bit of a bummer because they drop below this range, and I'm hoping that's just kind of an anomaly. You know, it does tell you that the market is panicky because somebody came out and said our AI is better than the AI you're going to spend $500 billion on. Is that half a trillion? And but their website's down, so it's like, well, you know, I don't know. Best AI in the world, but you can't run a website. Don't confuse the issue with facts. I know, Dave. But anyway, we're doing an okay job trying to fill this gap in, and it's pushed back this overhead supply. This is a market you want to avoid, though. You know, up, down, or sideways, kind of sideways, right? I know it's trying to get past this, but if we could get past all this crap, then it could be off to the races. For now, there's nothing to be done. Social media, just on all-time highs, that's in a pretty solid uptrend. Oil, the commodity, has pulled back and kind of stalled out quite a bit. It tried to take off, came back in. We got long KGS, which is, what is it doing? It's up 3 cents today. Woohoo! Yay! Oil stocks have been a bit of a bummer as of late. Let me just punch them in. XLE. You can see they tried to get going and then kind of roll back over. So the point I'm trying to get to here is there's a lot of, and here's energy by the media general groups, looks a little bit better, but you can see just kind of all over the place. But the point I'm getting to is that the market is very mixed. Some areas like the home builders have topped out and look visible. Biotechnology, like I said a second ago, is still not looking so great. in other areas are of concern. Your mags have lost some steam in here, could bow tie the downside. In fact, they have bow tied. No, not quite. So it's very mixed. And when it's mixed like this, like that one setup I showed earlier as a mystery chart, that's one of not many setups that I've shown lately, okay? All right, that's it for me. You guys have any individual stocks you want to look at? I know we look at stocks a lot in Facebook, a lot of IPOs and stuff. Let's take a look at the MTSR while we're on impasse. I can never remember the name of that stock. MTSR, that's it. MTSR. Oh, there it is. So I had a 2-point IPT, and I don't know if we made it this morning or not, but I do have an order in place. At least I hope it's in place. If not, then shame on me, but getting fairly close, or at least it was fairly close to that IPT this morning on that one. So that's the MTSR. Any individual stocks or crypto you want me to look at? Going once, going twice. Well, while we're in impasse, I want to thank everybody for watching. I appreciate you taking time out of your busy schedules. I'm going to experiment with going back to the daytime for now. My apologies for the confusion on what time. I need to get my time zone straight. But I'm thinking about bringing it back today, because when I was doing them during the day, I had a lot of people say, please do them at night, please do them at night. And I started doing them at night, and I found that there wasn't a lot of people compared to the daytime session. So we'll probably go back to the day. I started getting really active in the markets a while back, and I decided to shift it to nighttime, and then that probably cost me a lot of money. Probably should stay busy, like I say, and preach. Anyway, so we'll go back to, oh, you're welcome, Derek. Derek, what are you doing, buddy? Good to see you. Derek Hobbs, that's a blast from the past. Yeah, shoot me an email. Let's catch up. Anyway, I'm going to bring it back to the day, I think, for a little while. We'll see how it works. Next week, we have a holiday, so I'm going to skip next week, and then we'll pick up the week after. No more questions? All right, you're welcome. Everybody have a great weekend. I'll see most of you guys and girls on Facebook in a little while. Everybody else, have a great weekend, and I'll see you maybe in a couple of weeks at the next show. Thank you so much, and may the trend be with you. You're welcome.